You're listening to the Perth Property Show, Australia's only weekly property podcast by West Australian experts for West Australian listeners. Catch your latest episode every Monday at 7 a.m.
Good morning, everyone. Welcome to the Perth Property Show. My name's Trent Fleskens, your host as always. And we're a little bit delayed this quarter on getting our main man, Brendon Ptolomey, in the studio for his quarterly update. We've been so tied up with our suburb updates, talking to so many of our number one agents in WA, and I've been on a bit of a rampage with that, trying to get as much anecdotal data as possible, that we've had to leave Brendo on the wayside, and I feel horrible, mate. But how are you going?
I'm here, mate. I've just been sitting on the bench waiting for the call.
It has been. It's awkward, isn't it? When we're not getting to the start of April and we're getting a call, but we just slid you in right at the back end of the month. And to be honest, it's probably a good time to have that chat because we've had a few weeks of noise, haven't we?
Yeah.
And that ties in with data because there's so much. There's a qualitative and the quantitative side of data, and I guess today I wanted to go deep into both of those facets of our market and maybe try and have a bit of a crystal ball as to how that impacts our market for the rest of the year, and if it impacts it. I think the answer is it does. It's just to what extent. People probably right now want to know, is this the end of the market? Is this a bump in the road? Is it making any difference at all? People assume that it's going to. And when we're talking about the factors, we're talking about war, interest rates, fiscal policy with the May budget, CGT, negative gearing side of things, seller expectations, prices that continue to rise through numbers that we just wouldn't expect for properties across the board in this market right now. So there's so many pressures on this market that are having a crack at undermining the fundamentals, which are pretty indisputable still, of demand and supply. So let's talk through that, Brendo. Thanks for coming in, mate.
Mate, thanks for getting me in off the bench. I was a little bit concerned there that I've been benched permanently, but I can say that I'm much more appreciative of being in here in this timing, as in waiting a few weeks, getting through Easter, getting out the other end of school holidays, those kinds of things locally, but also in terms of those international events to understand a little bit more about what's happening around the world. Clearly, the change in terms of international events this time round is because of social media and because of the use of social media by leaders. We get these real-time updates from both sides of conflicts around the world, and it can be really hard to decipher what's going on. And thankfully, we're not going to do that on this podcast. What it does do in terms of the property market is obviously create concern, some worry, and probably affect our consumer confidence. And probably just reflect on when we're talking through the market when it was going absolutely crazy. And I'm giving presentations to family lawyers and brokers and bankers and our clients. You'd stand up there and people would say, so can you tell me when it stops? And can you tell me how it stops? And one of our answers used to be, on the list, would be a black swan event. What can calm this market down in little old Perth on the map in this big wide world? And it would be this black swan event.
What is a black swan event?
So just essentially that's something that comes out of nowhere that no one can really predict, that has a profound effect on an economy, and in particular in this case.
So we're talking about things like a GFC, COVID, the tech bubble, Spanish flu, the Great Depression. These are all
previous oil shock in the 70s, those kinds of things.
Golf. These are all black swan events, aren't they?
And so probably the question for the listeners out there that they'd be thinking around is, how does this all filter through to the Perth property market? Certainly, to give you that aerial view of things at this point in time, the feedback that we're getting on the ground from our 30-odd valuers around WA is that there's some caution in the marketplace. The number of listings is still really low, even though it's gone up a little bit. But the number of offers that are coming in on properties that are open for inspection and obviously for sale are dropping away, and they're probably down to maybe even half what they were before. So that sounds really scary, half of what it was before, but we're talking about super crazy record FOMO levels of offer numbers, 15 on a house down to maybe now 6. And how do we measure that concern and how do we measure that drop off? Because we need to keep the relativity between the fact that we've been in this crazy FOMO market to what a normal market is.
So maybe I can ask you a question, all else being equal across the 20-something years of your career. If I asked you one question of, hey, Brendon, if there was a market where most properties were having 5 to 6 offers genuinely coming in on the property, would that be a market that has growth? And if so, Would it be a 5%, a 20%, a 10% per annum growth? What would that probably reflect, everything else being equal?
I've been doing this for nearly 30 years in terms of being a valuer in WA. And in that history, we've had a couple of spikes, severe spikes in value growth, and that's 07, 08 and 13, 14. 07, 08 was as dramatic as it has been in 25, 26 this time around, and we've surpassed that this time around. So I'd say that getting 6 offers on a single residential dwelling is still an exceptional outcome and reflects the fact that there's going to be a spike in values, because you essentially have people bidding on other people's numbers, and it can only go one way, and that's to drive up values. Whether it drives it up in a $5,000 increment versus, say, what we've been seeing in the market most recently, $25,000 and $50,000 increments, becomes another question. So offer increments might be slightly lower now, given the concern in the marketplace, but to still have 6 offers is quite a phenomenal place to be.
And if I said to you, Brendon, on a weekly basis, the market is buying about 800 properties a week, how would that reflect in the market across the last 20 years?
Yeah, so that's a really healthy number as well. Let's just remember that when we were struggling about 5 years ago, probably 6 years ago, if we're getting to 600 sales in a weekend, the market was relatively happy with that, as in we had come off some lower bases from that. We're really struggling for traction. We're really struggling to understand where our buyers were going to come from. And the buyers were really shy in terms of being active in the Perth property market. We didn't have any investors here. So you can see that there's that 200 plus transactions each weekend that we would have been out back in those days. Yeah.
That is the number that we were averaging in the last mining boom, was about 800 a
yes,
week.
Yeah, absolutely. Yeah.
And what if I asked you then as well, Brendon, hey, what do you think a market would look like if it had less than 4,000 properties on the market for sale? What would the outcome be in that situation?
Yeah, this is really interesting, because I heard someone describe our market as having a demand problem, not a supply problem during this week, and they were not from Perth. So I thought it was really nice to flip it round and think about it from that point of view, i.e. there's lots of people here that want to buy a house, but I still can't get past supply because of the historic numbers. It's great to have that demand, but we are going to continue to inflate prices by the fact that there's just not enough choice out there to go around. And yeah, a total listing numbers below 4,000 is still at historic lows, once in a cycle type lows. And it should be, according to institutions like REWA, more like 12 to 14,000. And that they're historical numbers too, before we grew to a size of market of 2.3 million people. Yeah.
If you think about the supply side, we know that the best year of supply provision we had was 2017. We supplied about 27,000 properties.
Yep.
Our population has grown by about 30% in that time since 2017. So you'd think that per capita we should be able to build, just the amount of tradies we should have per capita, somewhere in the 30s.
Yes.
30-something thousand. The best year we've had since then has gone from 12,000 up to last year about 21,000.
Yep.
So not only we're not even keeping up per capita, we're way down on what we used to be. So we do have a supply problem.
Yep.
And that's just being obviated by the most demand from the most immigration that we've ever had on record.
Yeah, absolutely. And a couple of points there. John Kerry's quoting at the moment that their number is 330,000 people moved to WA in the last 5 years, which is a really decent reflective stat in terms of understanding where we've come from and gone to. And the other one that I've just looked at this week is just Melbourne house prices, just to prove out this theory on demand and supply. So they've actually overachieved their supply that's set out by the federal government in the Building Australia targets. They actually got up to, I think, 97% of their target in terms of achieving it. And funnily enough, in terms of achieving that target, they've kept their single residential house price steady / gone backwards slightly, because they've been able to supply into that marketplace.
That's really important to hear. When you go back to the John Kerry stat of 330,000 people have come in the state, that's 150,000 homes that West Australians would have needed to have built just to accommodate them. We've built less than 100.
Yeah.
So there has been some oversupply soaking up post-COVID from what was going on pre-COVID, but that wasn't about 70,000 homes. So I'd say we're still about 50,000 homes short of being in a balanced market for the amount of people that have come into this state.
Yep.
And so the last part of the question I'd say is, if a cash rate sitting at about 4.5%, let's call it, what probably happens in a market at that point? Is that historically in the last 20 years been a really high cash rate? Is it a really low cash rate? Or is it middle ground where you might not see a lot of impact from it.
Yeah, it's interesting that the interest rate charged by a bank out of that cash rate will end up being 6 to 6.5% odd. Some people might get something slightly better for their principal place of residence. And I think the market's relatively conditioned to that at this point in time. It's sitting just below where they'd all be comfortable.
Like a middle ground then.
Yeah, and just slightly below middle ground. I think if we get to that kind of 6.5 to 7s, that's where people probably, they're still feeling comfortable, but they know that it's starting to extend out to a number that they become concerned about what happens next. The next move from there to be downward.
I remember my first interest rate in 2010 was somewhere in the 7-8 space.
Yeah, and I think that there'd be plenty of people in our market that remember numbers like that, and that they would think that in particular an 8 would be a high number in their memory, and that would be a cause for concern in our marketplace.
So currently probably not having an inflationary or deflationary impact. It's probably middle ground right now, the rate space.
Yeah, and I think that type of interest rate means that the market participation rate is still really healthy, as in it's not prohibiting people from going and doing what they think they would like to do in their property journey.
So as you can tell, I'm fleshing out all those factors, all else being equal, to try and make a little bit of a green-red sort of traffic light grid here in my head about the factors that are impacting markets and whether they're a green or a red. And so they've all been green or an orange at this point in time in my head. And I guess the last two in that space is probably cost of living, so other inflationary points, as well as vendor expectations, because suddenly if the house just was double the price, everything else being equal, it becomes really unaffordable for a lot of people. So let's start with the cost of living side. Things have been getting more expensive every single year since COVID. It's just the outcome of washing tens of billions of dollars of Australian money through our economy. It essentially ends up in consumers paying more for goods and services and assets being more expensive. Next time we see money being printed, everyone listening, that's where the value goes. Assets, real assets, and the provision of goods and services. So the consumer loses. That's the whole point of inflation, right? So that's why we manage it through monetary policy. And it's why we criticize the government when they continually make it worse by adding more pressure to the demand side of the equation. So that's probably a red light, I'd say, is the effect of inflation over the last 5 years. And we have to balance that impact on our head against the green lights, Yeah,
and I think it's just taken a little while for that inflation effect to really filter into the Perth market. There's some state-based inflation numbers out over the last few months that show that we're more severe.
Ours is worse.
Ours is worse than the East Coast, and so that's started to bear through in stats. I went to Australian Property Institute's economic update recently, and Dr. Sherman Chan, the chief economist for the API, had a great stat there in terms of the inflationary CPI basket of goods. In general, we spend 3.4% of our income on petrol and transport, and 6.6% on alcohol. In terms of inflation, that's amazing.
The alcohol tax is actually the issue. And I hate to say this in a way that sounds like it doesn't really affect people or myself, but my fuel bill, when added up over the years, probably less than around $2,000. If that fuel bill ended up being $2,500 at the end of the year, it's probably not affecting the market in the way that the media would have it feel. Like, it's annoying. You notice it because you see it everywhere you're driving. But an extra $15 at the Bowser 20 times a year, it's not really affecting, in my head. I can't get my head around how it's changing behaviours in a way for people who, if you can afford to buy a house, you can afford the extra $15 a week. You know?
And be really careful about those people that can't afford that extra $15. I really understand that. But I think the really big point here is that there's a massive media storm that affects consumer sentiment out there. And it does just take a little bit of thinking from the average person to sit back and go, it's going to hit my credit card by X dollars a month. For myself, I essentially fill up my car kind of once a month. And so you can sit back and hope that I'll take the chance that I fill it up this week. And then hopefully the petrol price will drop in a month's time. And I get there's other industries where they drive a lot more than I do that really affects the prices. And I also get construction costs going up. And
that's what it is. I think the bigger impact is
the
actually
other inflationary side of things.
So, the outcome in a secondary nature of it drives up the prices of the goods and the goods mainly. And the services from a transport perspective that go into the things we buy. For example, we know already that the civil contractors in the land development space have all slapped all land developers with big price increases
Yeah.
because they have had big price increases. Pipes, like sewage pipes, have gone up 40% overnight. And that's not reflective of the oil price. That's just the market with a monopoly going mental. But those things will impact the price.
Yeah, and the interesting thing this time is that because the memory of COVID is so recent, those businesses have been smart enough or intelligent enough or
Ruthless
strategic enough. Maybe ruthless is a much better word. But they have all acted really quickly to pass on any cost increase that's coming down the line.
So I'm not doing this again.
Yeah.
And we don't want the civil contracting industry to end up the way that the building industry did, with half of them going insolvent. So we get that. But what it means is that cost gets passed on, and that 325 square metre block that was $250,000 5 years ago is now $520,000.
Yes.
And if you're just the younger sibling of someone who bought that block 5 years ago, you're now paying like more than double for the same land, let alone the house.
Yeah, absolutely. Which is quite shocking in terms of where our market's ended up.
I think that's the last point, right? That's the vendor expectation, whether it's the land or the house. That's probably, in a way, the more prohibitive part, where our prices are getting, than any other fundamental structural factor, I think, of the reality of getting to loftier heights in a cycle. At some point in time, it's going to start becoming more frictional. It's still a freight train going in that direction. The fundamentals of demand and supply are still sending that freight train in that same direction. But the efficiencies of the price growth, the friction to be able to accelerate in that space, start to, I guess, withhold it a bit. And it's things like interest rates. It's things like inflation. It's things like the increased cost of the product being the house and the land itself that will just inevitably start to dampen the outcome being price growth of the fundamentals. So I guess my response to that, and I'd love to hear yours, is that the fundamentals are still mental, that you cannot understate how mentally undersupplied we are right now. But don't be surprised as we get more and more expensive that our market, like Sydney's, becomes more sensitive to these downward pressures like increasing interest rates, like inflation, like loftier prices, that restrict growth. It won't send it negative because it's a positive structural outcome for growth, but it just makes it a lot harder to expect 20, 15, 10% a year. If you just chuff along at 7% every year, you're actually still in a really healthy market.
Yeah, absolutely. Ask the people in Melbourne in terms of them having a negative factor on their growth at this point in time. So let's remember that in calendar year 2025, where essentially the market went up by 20%, it is a bit ridiculous to think that you can do that 2 years in a row. We started January and February like we were going to do that. Both months grew pretty much 2% each month, according to people like Cotality. We're experiencing that same post-Christmas, end of summer, absolute FOMO activity out there. And I'm just trying to get back to the consumer sentiment side of things here and your point around vendor expectations. So we now move to a stage in the market where cyclically every single calendar year, doesn't matter which market we're in, activity goes down because we're heading into winter, those types of scenarios.
Winter sports, rain,
school
holidays.
back, distraction, life settles down to the normal rhythm, or we get too busy. So you take some people out of the market in terms of them looking. You then get the consumer sentiment side of things and the confidence that goes with the noise in the marketplace. So that takes a few more people out of that home open. So you then your opportunity for more offers walks out the door. And then you get to that situation where people that have been looking for the last year, 2 years, have a plan, we're going to upgrade, have tried to renovate, didn't work, still need a new house. They're still out there looking because they're relatively risk averse. They can see their way through the world in terms of the events that are happening. They've got the money that they need to transact their scenario that they've set up for themselves and their strategy, and they're still out there looking, and that's where those offers will come from. And then because we're coming off that FOMO market, I think there's a real risk for vendors to set their expectations too high and then wait around to try and achieve those expectations and miss out on the buyer that was the right purchaser for their property. That's where we then start getting a bit of negative marketing expectation, i.e. agents start reporting to us and to REWA and in the marketplace, I didn't sell that for the $2 million that I thought I'd get. But the $2 million was actually not always an achievable, realistic number.
Yeah, it was $1 million 5 years ago. It was 1.8 a year ago. It's like, guys.
And the numbers might be 1.9, and they should actually just be dealing in their head with their expectation at 1.9.
Would have got 8 offers at 1.9.
And transact within 2 weeks.
Is that happening a lot?
I think we're just at that teetering point in the marketplace at this point in time, and that's what would make it really difficult for good agents out there trying to work hard with vendors. It's enormously hard as an agent to talk the vendor down from their expectation. In fact, most agents wouldn't even go there in terms of trying to understand what that is. They'd see what the market offers them first. So you wouldn't set up your price expectation with your vendor to begin with. You get the market to come and tell you what the house is worth, then you go to the vendor. But they might find that the agents are coming to them with numbers that are under where their expectation was, in particular with the expectation being set up from the January.
Now, none of us are bold enough to suggest we know what's going on in Donald Trump's head and how long he's going to extend the craziness in the Strait of Hormuz. But the longer this goes, the more noise, I'd say the longer this just draws out the tariff election-like stasis that we saw last year.
Yep.
Like, to me, it's exactly the same outcome as last year when we had the tariffs. Everyone was like, oh, what's going on here? Life's going to fall apart. Nothing really happened. Elections, noise, negativity, we see it every 3 years. That's not a surprise.
Yep.
This just feels like that again, and it's just the only thing is we just don't know how long this is going to last. And I think as Australians, she'll be right. The first month or so, we're like, classic Trump, just causing noise and pressure, but he won't do anything and it'll be back to normal. It's probably gone on 2 or 3 weeks longer than I reckon most people around a dinner table thought it was going to, and now I'm getting a bit tired of it, going, come on, mate, can you wrap this up, because the rest of us would like to get on with business. Do you feel the same way?
Look, I'm trying to listen to as much information as I can. Thankfully, in the world that we live in now, we've got lots and lots of sources of international news and direct news from sources. And all of those experts, all of the people that read these marketplaces are really struggling to understand how this ends and whether it can end tomorrow or in months and months' time. One of the most concerning things I've heard this week was someone reminding us that when Obama did a deal with the Iranians, it took them 20 months of negotiation to get an outcome. And so none of us want to see that type of scenario happen here.
I don't think we need a deal. I think we just need a Strait opened.
Yeah, absolutely. Yeah. And so the other part to maybe think about here too is just that volatility is the new world order, and it would seem that Trump and that administration probably love trading off that and enjoy how that works out, and maybe they think that favours them or something along those lines. But unfortunately, that isn't a great scenario for us in terms of
it means inflation. That's what it means, right? Because inflation is just margin built for risk.
Yep. Yeah, spot on. Yep. And then it's interesting to watch some of the equity markets just simply not even react anymore. Like, we were reacting to individual tweets, and then now the market's just going, oh, yeah, I don't really care what he said.
Sort of white noise now, isn't it? So what do we do as property investors, property owners in WA? Do you just go keep it steady, stick to the fundamentals, don't listen to the noise, the fundamentals aren't really impacted by this?
Yep.
Or do you go, actually, this is a black swan event, this is the sort of thing that finishes a cycle, and we're all going to have to reset our expectations about growth? Which side of the coin does Brendon Ptolomey sit?
Look, I'm a positive person. That's my nature. I've done a couple of presentations recently where people literally walked out of the crowd and said, I just sold my house. I'm getting bridging finance to buy the new one. We're going to go and put some offers in this weekend. Do I just stop? How do I cancel the contract?
That's exactly where a lot of people are at right now.
My response, so I can only recount what I've said to those people, and that is, if you've got a plan and you can afford what you're doing, then you go and execute the plan, because you set this plan out for a reason. You worked out that you needed a study, or you're pregnant and you need 2 more bedrooms, or the kids are about to hit their teenage years and you've run out of room and you're driving
They're generally qualitative plans, really.
Yeah, absolutely. Yeah. So you should make sure they're good quality plans and you go execute them. If you're a speculative buyer and you're buying up as the Moneyball stuff, if you're buying 5 properties in Perth through a buyer agent at this point in time, I'd say you better go and have a look in the mirror, because that's really risky behaviour. I know it is anyway, but if you would have looked like a legend doing that last year, if you had bought even just 1 or 2 properties speculatively in Perth last year, your capital growth has been fantastic. So going out in the marketplace and being really risky in property at this point in time, remembering that it's a long-term hold for most people, is not really the thing to do. If you're going to buy an investment property for good reason to get a return and you've made a plan, I'd execute the plan.
So if you've got medium to long-term plans, this short-term shock shouldn't make a difference, is what you're saying. If you have short-term plans, it's probably never been the industry for that.
Yeah. And unfortunately, we do see those people playing in property. And the other thing is that it's difficult to see with the demand and supply situation that we explained at the start of the episode, numbers, valuations and property values going backwards. For that to happen, we need a huge amount of supply to be dumped on the marketplace. And I'd argue that that's not going to happen, I'd argue, number one. And number two, I'd argue the flip side of that a little bit. And I'm thinking about what happened in COVID here, where we go for a pause, but little old Perth, which isn't little old Perth anymore, is now a really attractive safe haven to live in. And I would expect, talking to some colleagues that have some contacts through the Middle East, it's now a really risky place to live. And I'm not sure when that de-risks into the future. And so there will be some filter. It might not be many people, but they might look through the Perth market and go, actually, you know what? That's a fantastic spot to live. And that's
more demand.
And, and that
this
means
is what we've been saying in this
demand.
podcast for 8 years now. The last time we had a GFC, Perth benefited from that. We had COVID, Perth benefited from that. And again, the two reasons: safe haven for money, safe haven for life, right?
Yep.
And everyone needs our resources. Is there an argument to suggest actually this is another situation where inflationary pressures added to the safe haven immigration space, both economically from a domestic perspective as well as societally from an international perspective, would mean just growth? And is, again, as I say before, when the world's on its knees, Perth stands up?
Yeah, look, and I don't want to get too bullish about the growth factor right this second as we're recording this in late April, but I would say that there's a few things that are underpinning our fundamentals in growth as a city, and I'll pull out one example, and that is our education economy. We're currently developing 3,500 student beds across Perth City, Nedlands and Freo. About 1,000 of those already in the marketplace. The other ones will be delivered relatively quickly. We've got a brand new ECU campus, university campus in the city that will have 10,000 students and staff in it. It's going to look like a very attractive place to study as a student. And it's just one factor that will put us on that map again for people to consider. Here's a nice, safe place that provides a great education and creates opportunity for me into the future.
What about AUKUS?
AUKUS is a really interesting scenario. I have spoken to someone recently, a friend that's involved in the finance side of AUKUS, and I reckon there's always a good scenario where you follow the money to find out what's really going on. And they tell me that there's significant private capital being poured into AUKUS type projects and looking for a home within AUKUS type projects, obviously also matching the state government money and the federal government money.
The support services for AUKUS.
To get planning for AUKUS. Everyone needs to stand back from that headline name and understand what's happening behind. And one of those parts of that industry is actually infrastructure. So the Henderson shipyard, that large marina facility there, the state and federal government have committed $278 million just to replan that zone. And that zone is earmarked for the construction of Australian Navy boats, essentially suitable for the Army and the Navy, which is all our own stuff, right? And the government is stating that they are increasing defence spending to 3% of GDP. And just
that's
forget
money
about
flowing to Perth for jobs,
absolutely.
Which is
and
people who need houses.
Boots on the ground jobs, and that means that those people need somewhere to live.
That's like an oil and gas project in our metropolitan area.
Yeah, in an area that is constrained still, as we've been talking about, Kwinana, Rockingham, down south of Rockingham, down into Port Kennedy,
environmental
Waikiki.
Constraints.
Yep, and housing constraints. It's not like they've got magic supply waiting for those workers to come and move to our state. Then the other, and these are sometimes anecdotal stories, but it gives you a little bit of a flavour of how people are making decisions, and that is just us in my work life seeing some people literally take good quality jobs in Perth where they had opportunities to take jobs elsewhere within Australia. So deciding to stay here is really my point. And it's nice to see the real life examples of that. And they're obviously staying contribute to the economy. Yeah.
Let's flip back to the supply side. Most of it's coming from house and land at the moment.
Yes.
What we know is there's a lot of efforts to get that going, but there's a lot of infrastructure constraints to be able to get these lots titled. You can make them look like lots, but you can't get silver and power to them.
Yep.
That holds people back. Civil contractors are making things more expensive on a daily basis. That makes them more expensive. House builders seem to be doing a pretty good job right now, but that ain't getting any cheaper. Yeah,
so cost is an issue, but speed or time to build, I'm told by both ABN Group and Summit Homes Group that they're about 10 to 11 months in terms of single-storey project home, single residential.
It's all right. It's not as good as it used to be, but it's all right. And what I've heard from the demand side on that is that there's still an underlying multiple offer demand space for land.
Yes.
There's just really not a lot available at all.
Yeah.
there's probably been a bit of speculation taken out of the house and land space. There's just less of those open corp style spruikers from the East Coast that are coming in and just selling house and land packages en masse, essentially.
And a bit of that attention in terms of those spruikers has gone to the Melbourne marketplace.
Because a lot of it probably.
That cost there in Melbourne is $750 to $800 now.
Yeah, it hits the 5%, whereas most of our stuff has gone over it now. So I'd say there's just a lot of genuine WA investors and homeowners that are still the demand base in WA, which is multiple offers, multiplier on the amount of supply. Every time there's a release of 7 lots, there's 150 people who want them. So that still seems to be a dynamic that's our reality. What about the apartment space? We saw the state government recently put out what I thought was a fantastic policy to say essentially, don't worry about pre-sales, guys. We'll underwrite you so you can go straight from DA to construction. That saves a lot of time and money, and I think that's a great policy.
Yes.
But the only caveat to that is the project still has to stack up.
Yeah.
And the builder still has to exist.
Yeah.
What's the reality from your conversations with people like David Cresper-Dervis and the rest of the fellas in the industry?
Yeah. So really it just comes back down to those construction costs. And let's just remember that we've still got a restrained supply of qualified tradespeople into WA. We'd still love for more of them to move from the East Coast and the Kiwi land to help us out over here. And there is still the Builder Life in WA program by the state government, get $10,000 to move here. That program is still out there. What we end up with is going back to the feasibility studies, and we just talked about it for single residential in terms of all of the costs going up. So let's just remember that's the same factor for built form residential development. All of those developers that have got a project in the planning, they would have gone to builders and had costings. They might have had some QS reports on the way through. All of a sudden, they wake up the day after the Iran conflict begins, and all of that work almost goes out the door. They've got to index everything again and go back to their feasibility to see whether it works. And all it does is crunch that margin, compress it a little bit further downward, and means that they are probably closer to not building as opposed to pressing the green light. Now, I just want to pick up quickly on what you said about the state government. They're coming up with new ideas, which is fantastic. There's some technicalities around the way that works that lives in my world in terms of who's underwriting the complex, who's doing the valuation, where's the capital coming from, that kind of stuff. And obviously they'll have a plan to work through that. But if we bring this all the way back to the conversation we're having about supply, it means that there's no magical supply coming out of the ground tomorrow for hundreds and hundreds of apartments to be finished and constructed in Perth that is going to solve our supply problem. Just wanted to reiterate to people that, again, it's just one more factor that shows that our supply side equation is not being solved, and therefore we'll continue to with that scenario into the future where we're undersupplied, demand's there, pressure stays on the existing product in our marketplace.
So what that means is there's not really scope for negative price growth. Prices can't go backwards if supply can't meet demand. We can see depressed price growth, smaller price growth than we otherwise would have thought we'd have, minimal price growth. Those are the options that we might have with all those deflationary outcomes for prices, but we can't have it go backwards. It's just not a possibility. And so the only other part of that equation is demand, and that comes from immigration, and the only way that happens is if we have materially less people coming into this country through the federal government's programs and then choosing Perth as their destination. And that's not changing until the next election at least.
Yeah, and interestingly, of the 80-odd thousand people that have immigrated to Perth on an annualised basis over the last few years, it's actually the immigration from places like New Zealand and the East Coast that really dominate our numbers. On a quarterly basis, I think we're only getting about 7,000 or 8,000 overseas migrants in. The rest of that is coming from interstate. So the stats actually show, and we just need to remember with ABS stats, the population stats do lag quite badly, but the most recent set of data that's the end of last year shows that most people are moving to WA from New South Wales, and they're moving from New South Wales to Queensland and WA. We expected that to be Victoria to WA, so yeah, it's really interesting.
I think that's because the Australian dream is done in New South Wales, and there's still a pension of that in Western Australia.
Yeah.
Maybe not forever the way things are going from a financial perspective, but at least now for the next decade, I think we've still got that opportunity for those ambitious people.
Yeah.
Let's wrap it up, mate. I've really enjoyed this chat today. It's probably not going into the grassroots, but it's been a really holistic chat. So probably just answering that dinner table barbecue question of, where's the market going? I'm a little bit nervous. We saw it a year ago, guys. It's noise.
Yeah.
It's not fundamentals. And so you make your investment decisions around appreciating that.
Yeah.
Is what we would say.
Yeah, and let's hope we've helped listeners out in terms of them thinking about what's going in the marketplace and deciphering some of that noise out there that is so prevalent at this point in the market.
Cheers, mate.
Cheers.
Thank you for listening to another episode of the Perth Property Show. If you've only just joined the conversation, you can catch up by heading over to our website, perthpropertyshow.com.au, subscribing to the podcast, or joining our Facebook page. Don't forget to tune in next Monday at 7 a.m. for more expert insights, local analysis, and suburb spotlights. Happy hunting!